Yes, I'm calling a technical bull market that's in its fledgling stage, and as long as it doesn't hit a whomping willow, it should fly. And the whomping willow, meaning Fed speak, to walk back some of Powell's talk than the presser. And in this fledgling technical bull market, it's going to be the little guys that lead the way here. The mid cap is at 15% or more, and the small cap is right above 10, and we must have at least one or two indexes above 10% to call a bull market, and here we have two. Next up, the stocks in the S&P 1500 above their 20 simple moving average requires two indexes above positive 80 to call a bull market, and we have three. And next up, the stocks in the S&P 1500 above their simple 50 moving average would require two indexes above positive 80 to call a bull market, and again we have three. And the stocks in the S&P 1500 above their 200-day simple moving average must have at least two or three indexes above 60% to call a bull market, and we have three. So welcome to the new bull market. Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Thursday, February 2nd, 2023. It's now 5:14 a.m. Central Time. We start off in the S&P 500 daily chart looking back to December 2021. I'll zoom into the current area now. And there certainly is a lot going on in the daily chart here, but we'll start with the combo and sequential sell setup 8 count printing, and to negate that for end of day today on the 2nd, there must be a close below 40.70.56 for the price flip to the buy setup count 1. Next up, the D wave up wave 5 has printed, and the D wave down wave 2 that was here disappeared, and the C that was over here with the up wave 3 shifted over, so now the D wave is on the D wave down wave C and the D wave up wave 5 C5. And the last time this was seen in the S&P 500 started back in the end of 2019, and it traveled onwards and upwards until January 2022, right at the very beginning when price fell off the face of the earth. And next up, a megaphone Cell 7 end count has printed and kind of snuck up on us here. It wasn't present, this megaphone pattern, until the 7th printed, so I think I'll ask DeMark about that, because it's really nice to know how the pattern is forming for buying and selling. And the megaphone pattern can be thought of as a broadening pattern, and the broadening pattern would look something like this in the weekly chart. Looks like a megaphone, this dashed red line here. It's bolded on the bottom and light on the top, and of course we've extended the top one to the present day, but that's a megaphone or broadening pattern. And by printing the megaphone cell 7 end count, all that means is that it has reach the end of the count, as we've have it set to 7 to end, and it's getting long in the tooth as far as the uptrend is concerned, especially printing the D wave up wave 5. And I'm going to take some time and read to you about wave 5, and it corresponds to the stage of the trend that Dow theorists would recognize as full participation by the public. The market continues to trade higher and actually goes beyond the primary wave 3 peak here. However, institutional buying interest dissipates in the later stages of wave 5 as professional investors reorganize that fresh long positions from current levels or higher are no longer favorable from a risk-reward perspective, become more defensive, and start taking protective measures in anticipation of a trend reversal. Early signs of a prospective top manifest themselves in the form of threatening bearish divergence between price action and momentum. So what that means is the FOMOs and the MOMOs have jumped on board and will push this potentially a lot higher, but the institutional investors and the smart money are looking for ways to lighten up their positions and possibly fade the market the other way, and that's justified by this disqualified supply line that I suspected would happen, and it did. So that's a fading opportunity, but that doesn't mean this can't get pushed higher by the general public. And bearish divergences between price action and momentum have certainly manifested themselves. Here the NY stocks only AD line did hit that arrow, and MACD is certainly lagging behind. MACD would have to start pushing this arrow up to get past this peak here. That's a long way to go. And the S&P 500's AD line and MACD looks exactly the same as the New York stocks only AD and MACD. And I am anticipating the combo sell countdown 13 to print here eventually, and maybe soon. I don't know why it did not print the 11 here for this bar. Let's give it some time, see what happens with today's action on the 2nd. And we're still waiting for the 13 anyway, so it's going to be a few more bars to go until that happens. Then I believe it's going to look something like this, where the sequential printed all by itself over here and had a pretty good downdraft. And price action in the pre-market hours for the S&P 500 at 5:40 a.m. Central Time is 41.40. So barring any emergency Fed speak by the other members of the FOMC other than Powell to backtrack some of what he talked about in his presser, we should print the sell setup 9 end count as long as price stays above this close for end of day today on the 2nd. And that would be a monumental turn of events, as the disqualified sequential and combo sell TDST way down here at 35.83 will move up to, I think, the bottom of bar 3 here of the setup count, 39.49.70, or it could be the low of bar 1 of the setup count, 39.71.64. I believe it will be here at this low. Either way, where it prints, it's going to put a floor way higher than it was before up here. So that's going to be major support pretty close to where we're at now. And I did listen to the Powell presser, and the one thing that struck me and made the markets start skyrocketing is when he answered a question and to the effect of that the Fed has sufficiently tightened financial conditions with everything they've done to date, and completely ignoring the fact that the market is running away from them, and that mindset of thinking by the Fed. So I believe that at least the S&P 500 and stock market in general probably will keep moving upwards and onwards, at least in the short term, until we print the combo sell countdown 13. I think I'm gonna try and switch this to the less strict version. Let's see what happens. I changed it to the less strict version for combo, and it did print the 11, so I think I'm going to keep it here, since it's going to be a real struggle to continue moving up. So that brings us closer to the 13. And it looks like that shifted the 9 and 10 that was here to over here. Here's the combo 10 and the combo 9. So let's leave it there. We're on the 11 less strict version of combo. And then there's another ongoing supply line here at 182, 41.82. So that could come into play if it gets up there. And then a sequential disqualified sell risk here. So if it can qualify the ongoing supply line and the disqualified sell risk level, these become qualified and confirmed, and maybe it can make a run up to the relative retracement disqualified up to and get that qualified and confirmed, and that's getting close to DeMark's up projection for wave 5 here at 43.49, and he uses, I believe, the highs and lows. We won't go into how that's calculated, but he bases it on highs and lows of waves in between waves here, and I have mine set to closes. So let's go take a look at that. And based on closing price for the calculations, the DeMark D wave down 2 and up 5 projection, basically the up wave 5, I should change this to the C now. The 5 projection is at 42.05 about, and I changed the 2 to the C for the down wave, so we're focusing on the up wave 5 right now though. So for today, the only levels in danger of becoming qualified would be the trend factor down 1, and right under there the ongoing demand line, and the levels for the today on the 2nd are configured in the big board. We'll go over there and look at that after this. And the cloud conversion line has bumped up a bit, so there's some support there. And in the S&P 500 daily cloud chart itself, there is an ATM exhaustion alert, so you can take these pretty seriously. The last one was over here on August 18th, And then one before that to the upside on June 17th. And we know what happened between there. The S&P 500 support and resistance levels big board chart shows the gray areas at the daily Bollinger Band upper band, the weekly 2018 broadening top and dashed red, and the daily high channel 3, which is really just a target. We can live above this for a few days, 3 to 5 days at the most, and then there'll probably be a pullback. And to the downside is the pivot point, the disqualified by TDST, the relative retracement down in the 3900 zone, along with the 200 EMA and S2. And to the upside is R1, an uptrend line from 06/16/2022, and the qualified and confirmed daily 100% propulsion exhaustion up, which for some reason did not show in the daily chart here. I just saw it a minute ago. Let me refresh it. Okay, there it is. There's a little glitch in the DeMark daily chart here. And there's the propulsion qualified and confirmed exhaustion up for 100% at 4179.92. And we'll look at the ongoing demand lines. Here's that one that has that steep angle. It's at 40.46 for this morning. And the next one is this daily ongoing demand line at 3960.35, and the one under there is this daily ongoing demand line at 3911.10. And it's needless to say that the NDXT is breaking out all over the place. And you can see it here. Micron jumped on board yesterday and ended up in the green, so everything in the NDXT is in the green and really flying. Look at these semiconductors stocks here really flying. AMD up 12%. Here's the semiconductor equipment manufacturer that makes chips, up 17 points. It's 2.68%, but look at that price. All these are going back right into the stratosphere valuation zone. What else is there? Lam Research up 30 points, and that's another one up there in the nosebleed area for price. Nvidia up 14 points. And Synopsys too up 13 points. It's really expensive. Have a great day.